In this video, I wanted to talk to you about the difference between your interest rate and the APR on the mortgage when buying a house. It's a very common question that we get. There's always a lot of confusion, so I wanted to talk about it. Plus, I wanted to share a little bit of a secret with you, why APR is the wrong way to compare lenders going forward. Most lenders and most consumers don't even know this, but I wanted to share it with you. So if you're interested, make sure you watch it till the end, and I'll show you why APR is not the best way to compare loan products and shop lenders. Okay, so if you're interested in learning more, stay tuned. Don't go anywhere. Let's start with the interest rate. So if you're buying a house, if you need financing, you're going to get some quotes from a local loan officer, and you're going to be quoted two rates. You're going to get the interest rate. That's what we normally look at, right? And then as you start getting documents, a fee worksheet, a loan estimate, a CD in the process, you always see another rate there. It's called the APR. So let's look at the interest rate. The interest rate is the rate that you are paying back the loan. So if you borrow $100,000 and you have a 3% interest rate, that's your interest rate. That's a rate that affects your monthly payments going forward. APR stands for annual percentage rate. And we get this confused a lot of times with the APR on your credit card. It's completely different. The APR when getting a mortgage loan is your interest rate plus the cost of obtaining the loan. So these are one-time fees. These are costs of obtaining the loan over the life of the loan. So over the duration of the loan, if it's a 20-year, 15-year, 30-year, right? It reflected in a percentage form, okay? And the intent of creating APR was to help borrowers, help consumers shop and compare loan products between different lenders, right? So you can have two different lenders. You're looking at quotes, same interest rate, but the APR is different. And usually the one with the higher APR would show that means that their closing costs were higher, their fees were higher, and therefore the first one would have had a better deal, better loan for consumers and buyers. That was the intent, right? So we're talking about one-time fees. These are not all of the fees associated with the purchase. These are fees that are tied to the loan of obtaining the loan. It could be paid by sellers, by the lender, or the borrower. And basically what we have is the discount points, the processing, underwriting fees, title fees, origination fees, and then the big one is MI. The mortgage insurance is a big one that's added to the APR. Depending on the type of the loan that you have, conventional will usually have a lower APR if you're doing 20% down. But if you're putting 3% down or 5% down with the purchase, your mortgage insurance, the PMI, is added to the APR, and it makes it look much, much higher. If you have a different loan product like government loans, FHA, VA, the upfront mortgage insurance fee or a funding fee, that's added back, and that is added and reflected in the APR as well. Looking further at APR, here's my issues. A couple issues that we have with APR. There's three. Okay, the first one is that it can be manipulated. So depending on some of the fees can be mismarked, and it's going to show up as different as a different APR on a fee worksheet. Lenders should not be doing that, but it could be a simple error, and if it's mismarked, the APR will appear differently or incorrectly, and we don't know what the exact APR is until it's actually paid off. What if the loan is paid off sooner? We know that nobody really holds the loan, the initial mortgage, for 30 years that they use when they purchase the house, right? So it could be paid off sooner, could be refinanced after a couple of years. That all messes with the APR. Secondly, APR is calculated assuming there's no inflation over the life of the loan. Thirdly, APR considers interim interest as a lender fee. What that means is that depending on the time of closing throughout the month, so let's say if your closing was set for closing at the end of the month, you have to prepay interest daily from the beginning of the month to the end of the month. That's why usually you see closings happening at the end of the month. So the daily interest from the beginning of the month to the day of closing, let's say you're closing on the 31st of the month, you have a whole month of interim interest that's considered a lender fee that's added to the APR, and that messes it up. Now, some lenders can literally change the date to the first of the following month, and then that goes away, and then that APR drops substantially. So again, APR is not the best way to compare lenders. You have to really get an estimated fee worksheet. That's what you have to get from all the lenders. You have to get an itemization of all the fees, see exactly what they're counting, what's being charged, what's being omitted, what is the exact closing date, because all of these items determine and are and will impact the APR. Okay, so if you're looking at shopping lenders, make sure you get an estimated fee worksheet. We all have them. You can get it from every single lender, and you compare apples to apples. You have to look at everything line by line, itemization, and you have to look at the closing dates. Okay, be very careful. Closing dates will affect your APR. That's a big one. A lot of lenders don't know about it, or those that do, they can manipulate the closing date and make it show up that it's a lower APR, but not be really giving you a better deal when buying a house. Okay, so hope you find this helpful. If we're meeting for the first time, my name is Peter Oreziak. I'm a senior loan officer and certified mortgage advisor with Cherry Creek Mortgage in the Woodlands, and I help people successfully finance their home purchase in Texas. So if you're in Texas and need help financing, give me a call, shoot me an email. If you have any questions, leave them in the comment section. And if you are a Bayern Munich fan, let me know. Drop a note in the comment section. Love to connect with some fellow Bayern Munich fans and a big fan of Lewandowski. There you go. And thanks for watching, and I'll see you in the next video.